Alright guys, so Bitcoin mining versus Bitcoin ETF. Which one is the real scam? So at the end of June, what happened was that Blackrock finally filed their Bitcoin ETF. And Larry Fink, who is the CEO of Blackrock, completely changed his tune about Bitcoin. What happened was that the market rallied, crypto Twitter went nuts coming from the support of Fink. And what we're gonna do in this video is we're gonna go in depth about what I think about the Bitcoin ETF. And at the end of this video, you can decide for yourself whether or not Bitcoin ETFs are a good investment. So stick with me to the end of this video and you're gonna learn of some Bitcoin mining companies that are on the safer side, and you're also gonna learn of some institutions that you can invest with that also invest with these companies so you can find some profit with them. But first of all, what we have to define is what is Bitcoin mining? So according to Investopedia, Bitcoin mining is the process of verifying transactions on the Bitcoin blockchain by verifying mathematical puzzles for which miners are rewarded Bitcoin. So the way to compete in this field is basically with stronger, faster, and more Bitcoin miners. So this whole entire game with Bitcoin mining is a rich man's game. So that doesn't mean that you're barred out from it. I'm gonna show you at this end of this video how you can participate in this game too and profit for yourself. So let's jump back into the Bitcoin ETF. Why is it that Blackrock is trying so hard to file a Bitcoin ETF? And not only Blackrock, but we have Fidelity, Invesco, WisdomTree, and Bitwise. They're all trying to file a Bitcoin ETF. Why now? Why now of all times when the market is worse than ever? We have higher inflation, rising interest rates, and the world is on the brink of World War III. If you want to know the reason, I'll give it to you right now. It's the US dollar. So over the past several months, there has been some events that scared me and made me really pay more attention to what's happening. And they are the BRICS' competing currency, that is Brazil, Russia, India, and China. And we have the student loan cancellations and the Ukraine funding. And lastly, we have countries now, friendly and unfriendly, trading oil in currencies other than the petrodollar. This all weakens the US dollar. And you know, as someone living in America, you don't want this. You don't want the value of your dollar to be weakened, but that is what's happening. And the current administration is not concerned about that. They're concerned about student loan cancellations, which doesn't make sense to me because according to Google in 2021, 13% of the American population actually own loans. That means that focusing on this matter actually pisses off 87% of the voters, and they put us further into debt. And why do I say debt? Because the only way that they can pay for student loan cancellation is by printing more money and using taxpayer taxes to actually pay for it. So if anyone can explain to me the current game plan of the current administration, do let me know in the comments below, because the moves that they're making makes no sense to me at all. And also, let's not forget the 113 billion and the $3 billion accounting error on the funds sent to Ukraine to support them in their war. So I think I got the point across that anybody who is in this game right now are looking to hedge the dollar collapse with hard assets. The hardest asset of them all being Bitcoin. Larry Fink sees this, BlackRock, Fidelity sees this, and all the other companies who are looking to file a Bitcoin ETF sees this. So with BlackRock, Fidelity, and co, they are not dumb people. They're super smart. They're not gonna go buy Bitcoin with their own money. That's the reason for the ETF, because with an ETF, they use client money to buy Bitcoin and they will own the Bitcoin. Even worse, as the client, you're gonna have to pay them management fees to manage the Bitcoin ETF, which, let me tell you, does not pay dividends. So it's just a money suck. And this is the smartest move ever by these institutions. So if you want to learn more about the red flags for the Bitcoin ETF, make sure you watch my other video, BlackRock Invests in Bitcoin ETF and Aim for a World Conquest. So to look at it another way, it's like having a bank account, because what happens is you put your money in the bank account, and if you don't meet minimum balances, the bank is gonna charge you a fee. So they're charging you a fee to hold your money, and they're gonna use your money as loans to make more money. All the meanwhile, they're not giving you any interest on the money that you give them to use as loans. So it's a complete scam. It's bonkers. So what does this have to do with Bitcoin mining? Let's remember the definition of Bitcoin mining: the process of verifying new transactions on the Bitcoin blockchain by solving mathematical puzzles for which miners are rewarded new Bitcoin. What a mouthful. But that means that miners are gonna be the suppliers. They're gonna be the sellers of these Bitcoin to these scam artists that are gonna be running Bitcoin ETFs. Instead, these miners are actually legit businesses, and if you stick with me here, it's gonna be soon. I'm gonna reveal two big mining companies and the biggest and most trustworthy institution investing in these companies, and they have an ETF that you can invest in. All right, so two of the biggest Bitcoin mining companies are Riot Platforms and Marathon Digital Holdings. Now, Riot Platforms doesn't just do Bitcoin mining. They also engage in design and manufacturing of power distribution equipment and custom engineered electrical products. Marathon, on the other hand, does exactly that. Marathon is a digital assets technology company, and it was formed in 2010 in Fort Lauderdale, Florida. So these are the two companies that I was talking about. Now let's take a look at their holders. So if you just go on the holders of the Yahoo Finance page for Riot and Mara, you'll see that Vanguard is the top holder of both of these companies. So Vanguard Group comes up at the top. So easily you can just go down and take a look at the mutual funds. And you can see that a lot of them are being held by, for example, Vanguard Total Stock Market Index Fund, Vanguard Small Cap Index Fund, and similarly here, the same fund. So those are mutual funds. If you want to go look at the ETFs, unfortunately, I don't think there are Vanguard ETFs that are holding these companies. It's all mutual funds. But there are some other companies like iShares, which is Blackrock, that is holding Riot. And for Marathon, again, there's Schwab, and again, iShares and Fidelity. And if you were to ask me which one would I go with, I would definitely go with Vanguard because I am biased that way. So by now, you have all the info you need to make an educated decision on whether to invest in Bitcoin mining or Bitcoin ETFs. But first, comment down below on which one that you're gonna choose, because I wanna recognize you for making it to this point in the video. But now that we know that Vanguard is the biggest institutional holder of these Bitcoin mining mega companies, we have to ask the question, what happens if Vanguard collapses? Well, we answer that question here. So you want to watch this video right after this one, so you don't wanna miss out on it.